So you have these many sections. You will have section 68, which will talk about cash credits, 69, unexplained investments, 69A, unexplained money, bullion, jewelry, or other valuable article, 69 investments in a financial year. So that is sine qua non to have returned a finding that you have made investment in the financial year. But what triggers 69 is what is not recorded in your books. What is not recorded in your books. So then a question would be asked, and you either fail to give an explanation or what you give is found to be not satisfactory. Then what is charged to tax is value of investment. Unlike in section 68, the sum found credited shall be deemed to be a income chargeable. Here, the value of that investment would be may be deemed to be a income. Now, not everything could be called as investment. For example, you are just found to be just having about a couple of crores of cash. You are found to be owning it. That is not investment. No one invests in cash. Cash is invested. No one invests in cash as such. So if you are found to be owner of certain assets which possibly cannot be categorized as investment, then will come 69A. If in the financial year you are found to be owning, look at the fundamental difference between 69 and 69A. In 69, there has to be a positive finding that you have made the investment. It is not that you are found to be owner. You have made the investment. Then only 69 triggers. Whereas 69A would trigger when you are found to be owner, irrespective of when you put your money in. When you are found to be the owner, in whichever year you are found to be the owner of money, bullion, jewelry, or other valuable article, irrespective of when you would have possibly put your money in. If you don't give any explanation, or the explanation which you would give is found to be not satisfactory, then the value of the money itself, or if it is not money, the value of bullion, jewelry, other valuable article would be deemed to be a income of the previous financial year. So, though section 69 and 69A intend to cover two streams of investment, they cover them in different manner. This fine distinction between the two will have to be ascertained. I'll give you an example, just before for that it will settle in your mind. See, if you are found to be owning land, such will take place. It is found that you are owner of a land. The question is whether 69 is attracted or 69A is attracted. 69 says where you have made an investment. So, is that an investment? 69A would talk about money, bullion, jewelry, or other valuable article. Is this land money? No. Is this bullion, jewelry? No. Is this any other valuable article? The article is essentially a movable property. So therefore, this land which you are found to be owner would not come under 69A. Then where it will come? 69. But for 69 to get attracted, it is important that there is a positive assertion and finding that you have made such investment in the financial year. So if department is not able to return a finding, uncontroverted finding, that you have made investment in land in a particular financial year, 69 is not attracted. 69A also is not attracted. 69A is not attracted because land is not the asset covered under 69A. 69 is not attracted because the criteria for 69 is not to find you to be owning it. Criteria for 69 is that an assertive finding that you have made the investment in the financial year. If you do not divulge in which year you have made the investment, nor is department able to find out in which year you have made the investment, 69 is not attracted. This story would not uphold for 69A. They come and bump into you holding huge amount of jewelry They need not establish which year you have put your money in. In the year in which you are found to be the owner, it could be regarded as income of that year. So that makes the critical distinction between 69 and 69A. See, in the course of my talk, there could be some overlap about this critical distinction, not only on this as well as in some other topic. To that extent, there may be a lack of coherence. You'll have to bear with me on that. I'm only trying to, understand the importance of fine reading of these sections. Then we'll go to 69B. What is 69B? 69B is some sort of an admixture of 69 and 69A. As I said earlier, 69 would apply to investment, which is not recorded. 69A would relate to money, bullion, jewelry, which is not recorded. What if you are partially recorded? If you are only partially recorded, and if you are not partially recorded, then 69 and 69A per se would not attract, because you are recorded in the books of account. Question is, how much have you recorded? So there is some delta between what you have expended and what you have recorded. There is a gap. That gap is sought to be addressed through 69C. Now, interestingly, there is one important fine distinction which you have to understand here is, in 69, what is deemed to be income is value of the investment not recorded. In 69A, what is deemed to be income is the value of the bullion, jewelry, etc., or the money. Whereas in 69B, what is sought to be taxed is the delta between what you have expended and what you have recorded. There is no mention of the word value in 69B. There's absolutely no mention about the value in 69B. So valuation is impermissible in case of partially recorded assets. Department has to find out what has spent on a property, for which they cannot do the valuation. There's a difference between value of the property and the expenditure incurred on the property. So the important point to be noted in 69B is valuation has no place over there in 69B. Now, 69C is unexplained expenditure. It could be any expenditure. It could be business, it could be personal, a wedding expenditure. Under section 133A, subsection 5, they can carry out an expenditure-based survey. So they could visit any expenditure, and after the last person in the buffet has eaten, then only they can enter, because they can enter the premises only after the expenditure event is over. If some wedding event is happening, a gala wedding is taking place in Pune, where, Sachin is holding a gala wedding, has invited all of us, and somebody would want to find out whether all the expenditure is accounted for or not from the department side, they'll have to come, wait till the last person in the buffet eats, then only come and make inquiry about the expenditure and take a statement from Mr. Sachin as to how much money has he spent. And if Sachin is not able to explain the source of it, then he has to pay tax under 69C. Now, 69D is, when it comes to 69C, the criteria of recording in the books of account, etc., does not arise. 69D is hundi transactions. We'll leave it at this stage. We'll come to it at the end. Now, if you recall one aspect which I mentioned about the distinction between 69 and 69A, where I gave you an example of land, where I mentioned that if I invested in land, 69 would come. Land is not covered under 69A. Then I gave you an example. You are found to be owning land, but neither you nor department would fix a particular financial year in which you have made the investment. Then 69 is not attracted, because for 69 to get attracted, it is essential that there has to be an assertive finding that you have made the investment in the land in a particular financial year, which if you're not able to do, 69 is not attracted. At the same time, I also told you that 69A also is not attracted, because the land would not fit into the items which are listed in 69A. Now comes the most important part. Does it mean none of these sections you get attracted? Does it mean that in all the cases where search would take place, some information is found where you are found to be owning immovable property, they cannot tax you at all? So just because these sections do not apply, it would not mean that you cannot be taxed. The foundation for me stating this is that the courts have always held that these sections essentially are rules of evidence. Merely because your investment in land couldn't be, taxed under section 69, and merely because other sections do not apply would not mean that you can go scot-free. You can still be taxed on the basis of the original rules of evidence. In fact, if you would refer to two decisions of the Supreme Court, Govindarajulo Mudaliar's case in 34 ITR 807 and Orissa Corporation in 159 ITR 78, the Supreme Court has reiterated that these are essentially rules of evidence. Even in the absence of these rules, it is permissible for revenue to tax you. Then you may ask me a question. If with or without these sections, if department can tax, why are we holding a session on these sections? Right. So two reasons. One is when the section is invoked at this point in time, you would only argue that the section is not attracted. If for whatever reason the appellate authorities are convinced and quash this, they may just stop there. They may not even get into the rule of evidence and go back to these decisions to say that otherwise also it can be charged to tax. Secondly, assuming the appellate court would quash it under 68 or 69, but would then say it could anyway be taxed by applying the original rule of evidence as adumbrated in Govindarajulo Mudaliar and Orissa Corporation case, then at least you could argue, now hear me carefully, that these sections are not attracted. Because these sections are not attracted, if at all you can tax me at the normal rate and not at the rate given under 115 BBE, for the reason that the sections which are referred to in 115 BBE are the sections like 68, 69, 69A, B, C, D. So the moment you are able to establish that your case wouldn't come within the strict corners of section 68 to 69D, though you may be taxed by putting you under income from other sources on the basis of rule of evidence, you can't be taxed at the rate which is prescribed in 115 BBE. This itself will cut your tax to 1/3. What is 80% will become 30%. And penalty also would go on that account. So therefore, it is important for you to know that, when these sections are applicable, when these sections are not applicable. I will give you some other illustrations later on where these sections may not be attracted, but you may still be charged to tax, but not at the highest rate under 115 BBE, but at a normal rate. And one more advantage of going out of 115 BBE is that if you stay under 115 BBE, as you would know, you have to pay 60% tax, 25% surcharge, as I've said, the highest rate of tax. You would not get the benefit of deduction towards any expenditure, allowance, or set off. However, the moment you pull yourself out of these sections, whatever income that can be charged to tax can be charged to tax only under income from other sources, whereby you'll get the benefit of carry forward, set off, all the allowances, etc., whatever otherwise permissible would be available to you. So that is where it makes an important point for you to stay out of these sections as much as you can. This is one point. I have another point before I take pause for the questions. So I was always wondering, I have not been able to get a proper answer as to why are these sections put under Chapter 6 of the Income Tax Act. See, after all, the heading of Chapter 6 is what? Aggregation of income and set off and carry forward and set off. It's aggregation of income. You have all the heads of income exhausted up to section 59. Then you'll have clubbing between 60 to 65 in Chapter 5, and then you'll have Chapter 6. So if it is intended for avoidance of tax, it could have been put under Chapter 10, chapter for avoidance of tax. Why is it that it's put here? And it's put post, heads of income. This will also give a rise as, of course, it's a judicial controversy as to whether the incomes under 68 to 69D would be categorized under a particular head of income, or are they headless incomes? Because essentially 68 to 69D would get attracted when you are unable to explain the nature and source. So unable to explain the source. So head itself will, predicate that there is a source of income. So if you're not able to explain the source and because of that you are taxed under 68 to 69D, that means the character of headlessness goes inherently with these sections. You can't say which business you want this money in. If you're able to establish it, then the sections are not attractive. So therefore, it is headless income. And because it is headless, why is it put under chapter 6? Is a point which you may think over and see, like if you can get any idea in respect thereof. Now with this, we'll take a short break and ask if any questions do arise in this case.
So
we
sir,
have veterans like Mr. Sharma, we have veterans like Mr. Punjabi. I'm sure they will have several questions here.
No sir, I am student. Sir, then in your land example, you said in the financial year it cannot be identified, it has been invested. Then you say it will be taxed under other sources. And suppose it can be established that
just a minute. Yeah. I have only said that under the rule of evidence, department may seek to tax you by applying the ratio of Govindarajalu Mudilar and Orissa Corporation. They may seek to tax you. Whether they'll be successful there or not is a point. I'll just add one more qualification before you start your query. See, Govindarajalu Mudilar's decision came in the context of 1922 Act. In 1922 Act, there were no such sections like 68 to 69D. Therefore, possibly the Supreme Court would have said so. Whereas now all these are codified through section 68 to 69D. When the Parliament codified it, one way to argue is Parliament wanted only to capture these many aspects. The rest of the aspects are not intended to be captured at all. It's another defense you could have if the department seeks to tax you, not under 69, but under other heads. Yes, sir, please proceed.
Yeah, so I was asking, so department cannot prove that this is an investment made in this year, and they can prove that it was made in last year, suppose. Then how it will be taxed, sir?
See, firstly, 69 will get attracted the moment they are able to find out the exact financial year in which the investment is made.
Yeah.
So whether it is year 1, year 2, year 3, doesn't matter. But they have to be in a position to find out which damn year have you made the investment.
Okay.
Then they can go to that year should the provisions of law permit them in terms of limitation.
Right.
The point which I was driving home is different. The point which I was driving home is they are unable to find out when did I become the owner of the land? When did I become the owner of the building? See, land at least they can definitely find out.
Yeah.
Because
jewelry,
there is always a title deed to it. What about the building?
Yeah.
What about the building? So when I build on that land, a huge mansion, and they're unable to exactly find out which year, what investment I made, then it becomes a clear case of 69 not being attracted because they're unable to identify which year have they made the investment.
Okay, got it.
Yes, sir. Any more questions?
So you said, sir, about the source of income, like in ATHSC, there were judgments. I'm only doing, suppose, business only, and say my export business.
Sir, can you just pull the camera closer to you because I'm only seeing half of your face.
Yes,
okay.
sir.
Yes.
So I was asking, sir, this, suppose I'm into the I was in the export business. Then under ATHSC, there are various decisions which said that it can be only business income because your only source of income is export business. So it can be taxed under business and you will get the ATHSC deduction. So this headless source and this, what is your views?
So I'll answer this question before I proceed with other topics. See, there is a difference in ATHSC and 68 plus. In ATHSC, there is no denial that you are carrying on business. In ATHSC, even if you look at explanation BAA, which will define what are profits of the business, they have very clearly said that those incomes which would fit in under Part D of, like Chapter 4, under the head profits and gains of business or profession. So the question is characterization. See, source is never an issue. Question is characterization. So whether you would there is an income, we know from where did the income arise. It could be fixed deposit, whatever interest. But question is fixed deposit a business fund or other fund? Should it be classified under section 28 or 56? That's the question. So therefore, the courts have held that if you are only an exporter, if you do not have any other known source of income, all the surpluses which are kept in the bank ought to have, provided they're all accounted. See, there is a difference there. It's all accounted deposits. Obviously, they're accounted out of only your accounted business profits, and therefore it will have the character of business income. This logic would not extend to 68 to 69D because you're unable to explain the very source itself. So therefore, there cannot be a parity between these two sections.
Right.
Is that clear,
Thank
sir?
you. Yes, sir. Thank you.
Yeah. Now, shall we proceed?
Sir, one question. Can you hear
yes,
me?
Yes.
Sir, for 69B, you have said that a department cannot obtain the valuation. Am I correct in understanding?
Exactly, correct. That's my reading.
So,
Not
sir,
that they don't
69B says that assessing officer has to find out the amount expended.
Exactly.
Now, suppose, take a hypothetical example that the assessee is found to be have made the investment in a building which is where the construction cost appears to be say 1 crore rupees. By apparently, if one can look at the building structure or etc. or area etc. and suppose it appears that the assessee must have spent 1 crore rupees. And suppose that the actual amount or bills etc. vouchers have been found out, and that is supposed totaling only 50 lakh rupees. So now it is clear that the amount spent is appearing to be 1 crore, but actually unrecorded vouchers have been found to the extent of 50 lakh. So you say that valuation cannot be obtained for the purpose of 69B. So what will be the amount which will be added, 50 lakh or 1 crore?
See, it's like this. Let us say, I will slightly alter our example because we need 3 numbers. We need 3 numbers, not just 2 numbers in your example. Let us say, according to revenue, you have the value is 5 crores of your building, right? Whereas you have recorded in your books of account 2 crores. See, 69B will attract only when you have made an investment which is not fully recorded in your books of account, correct? So according to department, they see your bungalow, they say minimum 5 crores. Whereas according to your books of account, only 2 crores. Now, merely because department finds it at 5 crores in their perception, they cannot refer it to valuation officer under 142A, who may then value it at either 4 crores or 6 crores or whatever. Because that is not the language used in 69B. The language used in 69B is amount expended, meaning 69B can be attracted not because in department's perception your building looks to be of value of 5 crore, whereas 69B can be attracted only if the department is having evidence to prove that what you have recorded in books of account, which is 2 crores, is less than what actually you have expended. What I am trying to say is very 69B can be attracted only if department has evidence to prove that you have expended more than 2 crores. If they do not have that evidence, 69B cannot be attracted.
Okay.
Have I made it clear to you?
Yes, sir. Yes, sir.
Now, if the department conducts a search in my place, I am your builder, and they have found that you have paid me 2.5 crores, whereas you have recorded only 2 crores in your books of account. Then they have evidence to establish that you have spent 2.5 crores, of which you have recorded only 2 crores in your books of account. Then they can invoke 69B, not because according to their fancy, it looks to be of a value of 5 crores. Is that clear?
Yes, sir.
Yes.
Sir, one more question. Sir.
Look at this. Look at this. See, I am yet to begin discussing even section 68 fully. Look at the kind of questions that flow in. Yes. Yeah, we'll take another question before I proceed, because then I'll put a caveat on the question. I'll have to move ahead. Okay. Now I'll take one question. Mr. Rajendra, because I already asked the question, I would rather give the opportunity to somebody else.
Sure.
Yes, if somebody else has any other question.
Yes, the question is that we are making this finer distinction between these sections, and we keep on arguing that this particular section is not applicable. But at the appellate forum, it is observed that they conveniently change the section and apply that section. So what is the legal position about it?
See, this is a very important question. There are 2 things here. can this section be changed? Like AO may have invoked 69 wrongly for jewelry. Which is the right section for jewelry? 69A. Now you go to the commissioner. Appeals against the addition made in respect of jewelry under 69. You would only argue, I'm sure you would never be naive to argue that 69A is attracted, not 69. Your argument will be confined to saying 69 is not attractive. Now it depends on how intelligent is commissioner appeals. If he is not very intelligent, he would possibly hold that yes, 69 is not attractive. On the other hand, if he is intelligent, he would examine, oh, if not 69, why not 69A? So then he could possibly, in terms of the powers he has under section 251, subject to debate as to whether he has such power or not, he could possibly change the head. But when you go to the tribunal, in my humble view, the power which the tribunal has under section 254 may not extend to, like changing the very section under which an addition could still be sustained. Because end of the day, income tax department has to pass such order thereon as it thinks fit. The word thereon, as the courts have always understood, would constrict the otherwise wide powers of the appellate tribunal. And I'm sure High Court would not have the power to change the section because High Court's role is only to answer a substantial question of law. So, therefore, firstly, according to me, except at the commissioner level, it may not be legally fine for the appellate authorities to change the section. Secondly, the question of interchanging section would arise only if the addition could be sustained, like I gave the example of jewelry, where of course it's a question of whether 69 or 69A. Whereas take the example of Mr. Rajendra about 69B, it is not covered under any other section. When it is not covered under any other section, where is the case for interchange? So question of interchanging section would not arise because it wouldn't fit in under any sections. Like the example of Mr. Rajendra about 5 crores, 2 crores and 2.5 crores, there is no other section which will fit this in. That's it. Yes, sir. Shall we proceed now?
Sir, just a minute. In fact, I wanted to raise the same question which Mr. Singh has raised.
Then we will not spend time on it.
No, just one facet I want to add. Suppose the finding in the assessment order clearly says that
Mr. Rajendra and all the delegates, this is the last question I would take at this point in time so that I have to proceed, right? I would appreciate your questions, but at the same time, we also have a task to deliver. So please take only one question now, and henceforth I'll move to the other things till I take a pause. No more questions, right?
Yes, sir.
Yeah, please.
So, sir, if in the finding in the assessment order clearly says that the AO should have invoked the say 69C or 69B, etc., the charge he wanted to he tried to allege, but just as a matter of typo error, which can be said he can get a rescue under 292BB, etc. Then in that section, then in that scenario, I think there will be
no. It's not 292BB. It is 292B. Okay.
Right. Oh, yeah, 292B. So correction of the type or a contempt. But in the substance, if they want to change the charge or appellate authority, then I think according to you, it may not be possible, right? Am I right?
See, your question is more on 292B. 292B can only be for correction of minor errors. Through 292B, you can at the most address typo error, but not the error in substance, right? Yes. Fine. So now we'll move to the next topic. See, if you would look at these sections 69, 68 to 69B and C as well. Of course, this is not a new thing. You would know all these sections use the word may. You know, Noor Jahan's case, Supreme Court in 237 ITR 540 in the context of 68. So because it is discretionary, but a 69D uses shall. So this is where you will have to be careful about. And you will have one very important situation of voluntary offer of tax under these sections. In your return, you would offer. Because otherwise it was unheard or inconceivable that I will myself offer 68 to 69D in my return of income. But then if you look at the format of the return of income, there is a column where you could offer income to tax under section 68, etc., which is put under income from other sources. Now, if you do so, will it still be called as income under 68 merely because in your return you write 1 crore? Loan taken from Sachin, not able to prove 1 crore. I'll put it under section 68 and file my return. Is it a case of section 68? Is a point which we'll discuss a little later when we go to 115 BBE. Now, coming to head of income. See, as I said earlier, the question of invoking any of these sections would arise only when you're able to give explanation about the nature and source. When you fail to give the explanation about nature and source, these sections would get attracted. However, there is a passing observation in Supreme Court's decision in Orissa Corporation 159 ITR 78, where they have said that this could either be called as business income or income from other sources, depending on the facts of each case. So it actually wouldn't fit into scheme of things. However, why I still thought I will invite your attention to this decision is, if, for example, some additions are made in respect of your, like unexplained investment in stocks, your business assets, unexplained investment in stocks, where it will come? Will it come under 69 or will it come under 69A? They will conduct a survey, they'll conduct a search and find some inventory items not recorded in your books of account. So is it money? No. Is it money? No. Is it bullion, jewelry, or other valuable article? See, money, bullion, jewelry, or other valuable article. Your stock in trade cannot be called as an article. Valuable article will have to be understood ejustem generis with bullion, jewelry. A painting could be possibly a valuable article. So therefore, if there is an inventory and that inventory is not found recorded in your books of account, in my view, 69A cannot be attracted. Then can 69 be attracted? Is it an investment? I've said earlier, it's possible to say that it's an investment, but then are business assets called investments generally? So when you would apply the ordinary understanding of the meaning of investment, your business assets like inventory, etc., machines, etc., cannot be called as investment. They're all business assets. Assuming that somebody would say the inventory is also an investment, it's very, very difficult to, accept with our accountancy background to regard inventory as investment. Assuming, without conceding, that the court were to say, yes, this is also to be regarded as investment, then does the department have evidence to prove that you have made the investment in the financial year? As I've told earlier in the beginning, unless and until there is an assertive finding that you have made investment in that inventory in that year, it cannot be invoked under section 69. That is where you guys will have to keep in mind and actively argue a case. If unaccounted inventory is sought to be brought in under section 69, unless and until department is able to find out that you have made the investment in that inventory in that year, 69 cannot be attracted. And 69A also cannot be attracted. So at the most, it has to be treated as business income or income from other sources. So that is where the decision of Supreme Court in Orissa Corporation could be of some help. Yes. Now, of course, you have a Bombay High Court decision in Faqih Muhammad Haji case, where they have said that, they do not belong to any particular head of income because they don't come under section 14. They are just charged to tax as not falling under any particular head. Now, with this, we will move to next topic. So all these sections, if you see, if you look at section 68, so it will deal with a situation of a sum is found credited and you offer no explanation about nature and source, or explanation offered by you is not found satisfactory. So what is the explanation which you're expected to give of the nature and source? The language used in 69 also is same, nature and source. And 69A also nature and source. Whereas if you look at 69B, which example which Mr. Rajendra gave, question of nature and source does not arise. They are not even used the word nature and source in 69B. They only said that if there is a difference between amount expended and amount recorded, there is an excess amount, you are expected to give explanation of the excess amount. You don't have to give nature and source. They may say nature and source is part of the explanation, which is another part. But what is important for you to notice is in 69B, they are not used the word nature and source. And when you go to 69C, it's only about the source, because nature they have already found. During the wedding, they have found that you have incurred the expenditure. So nature of expenditure, there is no need. So interestingly, nature and source are used in 68, 69, and 69A, not used in 69B. Only the word source is used in 69C. Now, see, we will now try to spend some time on the meaning of this explanation which you give. See, the explanation you give cannot be a fanciful explanation. It has to appeal to the ordinary human mind, reasonably instructed. And it has to answer the human probability. This is what the Supreme Court said in Durga Prasad Mora and Sumati Dayal's case. And you give an explanation about the nature and source, and whether that explanation is to the satisfaction of the assessing officer or not, is satisfactory or not, is a finding of fact. It's a question of fact. This is what Supreme Court said in Mohan Kala case when the Madras High Court upset the finding of the tribunal. So there were some foreign gifts. Madras High the tribunal found that the explanation is not satisfactory. The High Court disturbed it and held in favor of the taxpayer. When the department took it to the Supreme Court said in Mohan Kala case that the question of whether the explanation is satisfactory is a question of fact. A question of fact cannot ordinarily be raised under section 260 capital A unless it is a substantial question of law. So when a question of fact becomes a substantial question of law, when such fact finding is perverse. So when is it perverse? It gets perverse when relevant facts are not considered, or irrelevant facts are considered, or an admixture of both, one or more of relevant facts missed out, one or more of irrelevant facts taken. Even if one irrelevant fact is taken, it becomes a perverse finding because we do not know to what extent the irrelevant fact has influenced the mind of the decision maker. So therefore, if at all you are appealing to High Court against the decision of the tribunal about the explanation being not satisfactory, it is important for you to apply your mind and make it as a question of law by showing the perversity in the finding of the tribunal. So this is something which you have to do. Even many lawyers will not, they just frame questions. That is where the chartered accountants, particularly learned chartered accountants, could even, alert the lawyer, saying that, how do you say it's a question of law? So you should assist your lawyer, whoever is drafting it, to ensure that the question of law is clearly made to look like a question of, this is clearly made to look like a proper substantial question of law. Because you have 2-3 decisions here, like Vijay Kumar Talwar's case, 330 ITR 1, Sudarshan 300 ITR 205 Sudarshan Mills case. In all these cases, the Supreme Court has very clearly held that the perversity will have to be brought out in the question and sufficient pleadings have to be made in the appeal memorandum. So this is a point which needs to be noted. The next important topic is you offer an explanation, which explanation which you offered is not found to be satisfactory by the assessing officer. Very, very important. See, if you do not offer an explanation, question of him being satisfied would not arise. Straight away, he is going to tax it. Here is a case where you offer an explanation, and that explanation which you offered as regards the nature and sources not found to be satisfactory. That is when the word satisfactory is important. It also means that not found to be satisfactory means assessing officer is not satisfied. So what is the meaning of satisfied? Him at his ipse dixit saying, I'm not okay with the explanation is not sufficient. Please look at the decision of Supreme Court in Godrej and Boyce, 394 ITR 449, and Maxop's case in 402 ITR 640, where the Supreme Court has discussed the meaning of satisfaction in the context of section 14 capital A, but these words are equally important even in the context of section 68. Now, see, many times, particularly in the case of cash credits, you would, offer explanation that I have borrowed from so and so. Then the department would ask you get him, ask him to give details, but your relation with your lender may have turned sour. He may not be in the position to, attend to your request. In which case, you may always write to the department, please issue a pass under either 133A6 or under 131, in which case assessing officer has to exercise the power. Orissa Corporation's Principle 159 ATR 78. In fact, Divine Leasing 158 Taxman 440 Delhi High Court says you cannot just issue summons, you have to pursue it, you have to follow it up. And particularly when the assessee would request for issue of summons, you have to do it is what Delhi High Court in Ghaziabad footwear case says. So these are some of the, many a times what would happen is, as chartered accountants, when you would be submitting details for your assessees, details are not forthcoming within the assessee, in which case, at least somewhere obscurely you write to the assessing officer. So we are not able to get it because we don't have powers to insist the other person should come. Kindly exercise your statutory powers to do it. Why you should do it? If you don't do it, he will not exercise. When you particularly request and if he will not exercise, it's a good case for you to have it quashed in the appeal. So the moment you get it quashed in the appeal, the demand goes. This is extremely important. Otherwise, the demand will remain. If the demand goes because of remand, it becomes a case of 153.3 or 153.5. Now, there are situations where the time limits are very harsh now. Earlier, there are no time limit for remand. Later on, they brought it by way of 153.2a. Now it is substituted by 153.3. Now everything is time bound. So the moment you have it quashed and set aside and have it remanded, it's quite likely that if your client is lucky enough, they may miss the due dates. Thereby, no more assessment is permissible. For all these purposes, whenever you find your case not too strong, from the point of view of information not being available with your assessee, you should always make it a point to write in your submission at some place that all this information is available with the so-called lender. Kindly issue summons to the lender and get the information exercising power because you don't have similar power. Now, you have a decision of Supreme Court in Anis Ahmad's case in 297 ATR 441. You would say you have borrowed from 10 lenders. The department would issue summons to 10 lenders. About 6 lenders, summons could be served, and the 4 lenders, summons could not be served. Assessing officer cannot make 40% addition to you. See, department not being able to serve the summons is not your fault. So therefore, there cannot be some sort of an unequal treatment between, those who appeared and those who not appeared. And one interesting case, a very interesting decision which you can take note of. A1 housing complex, 110 ITD 361 Delhi Tribunal decision. Here is a case where department sought confirmations. What assessee did is he himself prepared prototype confirmations and got it signed by all the parties. Department said, how is it possible? How can you have the confirmations prepared and just get it signed? So the tribunal said there is nothing wrong in it. It's absolutely fine. Karnataka High Court, where I had the privilege of arguing in a different context, in the context of 40A, 1A, where transporters payments were made, subcontract payments were made where it was less than the limit. Department alleged that, you have artificially split it. This man got prototype, confirmations and got them signed by all these guys. So the question that arose was as to whether this is genuine or not. So it was argued that, those lorry drivers cannot be expected to write in a language which department can understand. So I have only assisted them and explained to them and they have signed it. So, that was accepted by the Karnataka High Court and the matter was remanded. Now, one important observation in Mohan Kala, which I would, request the learned delegates to spend their time here. See, what is 68 about? You offer an explanation about the nature and source, which is not found to be satisfactory. Then what is the course? Department has to add it. Mohan Kala said that. But then they have made one statement, which statement is very difficult to fathom. So I would request Mr. Sharma, Mr. Punjabi, Sachin, Mr. Shah to just look at this. What does it mean? Supreme Court writes, even after rejecting explanation given by the assessees, if found unacceptable, take a pause. If my explanation is found unacceptable, nothing more needs to be done. It just has to be added to my total income. But Supreme Court says, no, that is not the end of the matter. The crucial aspect, whether on the facts and circumstance of the case, it should be inferred that the sums credited in the books of the assessee constituted income of the previous year must receive the consideration of the authorities, provided the assessees rebut the evidence and the inference drawn to reject the explanation offered as unsatisfactory. It is like a wheel. Firstly, they have said it is not found acceptable. Lastly, they are saying, no, you can give some explanation provided you rebut the evidence and the inference drawn by the assessing officer that your explanation is unsatisfactory. This is like wheel within the wheel. So, and between these two, the Supreme Court says it is open to you to argue that the sum found credited does not constitute income of the previous year. Meaning what? The only meaning which I can gather from this is that if I am able to somehow establish that, yes, I have failed to explain the nature, I have failed to explain the source, or whatever I explained is not okay to you, but I would somehow establish that it could not have been my income of the previous year. Like on first day of April, 10 crore is credited. My turnover all along across is only much smaller amount. 1 crore is credited. I'm able to say that I've received foreign gift, but I'm unable to, establish the source of the foreign donors or whatever. So, but 10 crore, could it constitute the income of that previous year? That should receive the consideration of the authorities, is what the Supreme Court is saying. How practically it could be implemented, I am so far not able to fathom. Anyway, I will leave it at that. I just thought I will invite your attention to this particular point. Now, this is an important aspect which needs to be kept in mind, that the explanation which you have to give about the nature and source. What is the meaning of nature and source? Trinity of factors. This is brought out by Supreme Court in Sri Lanka Banerjee's case, 49 ATR 112. Identity of the creditor, creditworthiness of the creditor, genuineness of the transaction. 3 factors will have to be established. We call it as trinity of factors: identity, creditworthiness, genuineness. Identity, I have borrowed from Sachin. Sachin exits. His PAN number is given. identity is true. Genuineness of transaction. There is a payment by check. There is nothing to prove that cash has flown back to him. Recorded in my books, recorded in his books. Genuineness system. Creditworthiness of the creditor. What is the meaning of creditworthiness of Sachin? Sachin has lent me 1 crore. His net worth base is 15 crores. Is he not a man of means? But should I then establish how did he get this particular 1 crore? That is not part of creditworthiness. So in my view, creditworthiness is the general standing of the so-called lender. So if his general standing is such that he is a man of ability to lend me 1 crore, that according to me, creditworthiness is satisfied. Further getting deeper into it, as regards 1 crore, how did Sachin get his money? Did he use his unaccounted cash or did he borrow from Mehul? Is another part, which will not, permit anyone to travel beyond establishing creditworthiness. So therefore, the nature and source, the explanation which you give as regards nature and source would be in respect of the trinity of these 3 factors. And particularly when it comes to creditworthiness, establishing creditworthiness is not the same as establishing rupee to rupee mapping of how did Sachin give me 1 crore and where from did he get this 1 crore. No, that is not the part of establishing creditworthiness. Creditworthiness is the larger part about whether he is a man of means, whether he is a man of standing, whether his net worth on a prima facie view of it would suggest that he is capable of lending me 1 crore. Now, once I have established these 3 factors, then between Sachin and Mehul, I do not have to bother. This is what a beautiful decision of Guwahati High Court. See, those who would want to really understand the niceties associated with cash credit, please make sure that you read this Nemichan Kothari decision of Guwahati High Court. Very well written decision. Easy to remember also, citation 264 ITR 254. Just 10 short of the first number. So that's where you would appreciate creditworthiness is not the same as source of source. My source is Sachin, and I have established the transaction to be genuine with identity, and he is a man of means. Good enough. I don't have to establish the source of source. You have a fleet of decisions which are, held that the source of source need not be established. The Daulatram Rawatmal, you will have Subhash Dalmil's case, you will have Mangila Agarwal's case, plenty of, you have series of decisions. Now, another part which needs to be appreciated here is about intangible addition. See, you have made some investments in the current year, which are unable to establish. You would then account for it on the basis that, look, sir, in the past years, there have been some GP addition to my total income. See, consistently, you have been offering at 2%, they are taxing you at 3%. Up till last year, for last 5 years, let us say they added up to 2 crores. The GP addition is called intangible addition because they are unable to find out. But from your books of account, in terms of section 144, read with 145.3, they would have rejected your books of account and would have assessed you at some damn GP. So the addition made, let us say, which has amounted to 1 crore, is called intangible addition. You claim now this year investment which you have made is out of that intangible addition. You are found to be owning jewelry this year. They'll come under 69A and would ask you, hey, where did you get this 1 crore worth of jewelry? Then you would say, sir, for all the last 5 years, you have been making intangible addition. And I kept on investing it in jewelry. And that is that 1 crore. See, you are able to do so, provided it is reasonable. Anantram Veersenga's case, 123 ITR 457. In fact, statutory recognition also exists for this. If you look at 271 1C explanation to the old penalty provision, or the current penalty provision 270A subsection 4, they recognize this. So therefore, this is something which you could always, look at intangible addition as an explanation to this. Now, before I proceed further, any questions? I'll take a couple of questions. Relating to what I've discussed.
Currently, the chat box shows only the questions relating to penalties, but if anyone has any questions.
A penalty we will not ask, will not take the question now. We'll we'll take it a little later.
Sir, I don't know whether this question is relevant now or you may discuss later. Word may, suppose the section is contained with some additional conditions like source of source, then also word may is relevant, sir, or then whether you have to read word may as shall.
It's a very important question. In fact, if I would have time, I will have discussed it when I will discuss the provisos to section 68. Because under section 68, first proviso will deal with loan or advance. Second proviso would deal with the share capital, share premium, etc., where it is now required for you to establish source of source. Let us say source of source you are not able to establish. That will only mean that your explanation about the nature and source is not found satisfactory. Even then, may remains may only, may will not become shall. Because the fiction which is created by the provisos will be only to the extent of whether it is found to be satisfactory or not. Merely because it is not found to be satisfactory doesn't mean the addition is imminent. So this is what, like Noor Jahan's principle says. Therefore, in a given case, it is possible that even if the source of source is not established, the word may still remains may. It's a different matter that the department may anyway go ahead and make the addition, but the fact remains that may remains may even after the invocation of the proviso. Yes, sir?
Yes, sir.
Any more questions? Shall I proceed? Yeah. Now let's look at interplay between multiple sections here. See, if you look at 68 and 69D, they use the phrase previous year, whereas all other sections use financial year. In fact, if you look at section 69, it uses financial year immediately preceding the assessment year, whereas 69A, B, and C would use merely financial year. So I would not be able to, make out why have they used different phrases, except that possibly, up to 1987, they had non-uniform previous years. Maybe for that reason, they would have used financial year in these sections. And interestingly, in section 69, there's a financial year immediately preceding the assessment year. Whereas in other sections like 69A and C, they just use the word financially. This also is, like very, very difficult to understand. Why have they said that? And one more important thing is if you look at section 68, it says maybe charge to income tax. The word charge is coming there in 68. Whereas if you look at 69 to 69C, it only says it may be deemed to be the income of the assessee. It just says it may be deemed to be the income of the assessee. The word charge is not there at all. Again, it may be too much of an academic exercise. I'll just bring your notice to the important difference here, and I'll leave it at that. I will not get into the other fine-tuning of it later on. Now, I will just skip some of these and straight away go to, yes. Now, one more interaction which maybe we'll discuss. Let us say you have bought land worth 1 crore. Value is not doubted. And you are recorded in your books of account, obviously on the asset side. The moment your land of 1 crore is recorded in your books of account on the asset side of your balance sheet, 69 cannot be tracked. Very clear, because question of 69 coming to play would arise only when you have made an investment which is not recorded in the books of account. But then, for explaining this 1 crore on the asset side, you may have pumped in some sort of an inflow on your liability side. That could be questioned. If that is questioned, then it's more a case of invocation of section 68, because he would want to explain the source of that credit entry, that is where a sum is found credited. So this is how you could interlink how you would have recorded an investment and possibly would have come out of section 69. But when it comes to explaining that, you would have put a source on the liability side, and 68 could get attracted in that regard. Next is books of account. This is a very, very important aspect. First is, we'll go to one aspect of rejection of books of account. Now, one interesting question that would arise is, many a times income tax department would assess you on GP basis, meaning what? They reject your books of account. Having rejected books of account, can they invoke section 68? What is 68? A sum found credited in your books. Is it permissible for the income tax department to reject your books insofar as net profit is concerned, but still take your books insofar as the credit entries on your liability side of balance sheet are concerned? So it will be like, picking and choosing, a cherry picking. Like in transfer pricing, we use no cherry picking exercise. Or blowing hot and cold. For net profit, you have Woodward Governor's case. Supreme Court has said in 326 ITR 1 that, or rather 312 ITR 254, where the Supreme Court has said that you're not permitted to blow hot and cold. It was a case of forex gain or loss. When there's a gain, department would tax. When there's a loss, they will deny the benefit of loss to you. So you can't blow hot and cold. You have Mehta Parikh's decision, 30 ITR 181, old decision of Supreme Court, which has said that, in an affidavit, you can't take selective portions that suit you and, leave out the portions that don't suit you. So therefore, in my understanding, if they reject your books of account for results, like your net profit, they cannot rely on the very same set of books for the purpose of making addition under 68. It will amount to blowing hot and cold. However, look at decisions on either side. I will not spend much time on it. I have only told you what I felt. G.S. Tiwari and Co., Allahabad High Court, and an old decision of Supreme Court in Devi Prasad Vishwanath's case, 72 ITR 194, support the department's action of, making addition under 68, even if your income is assessed on a GP basis. But then there are other decisions, like more latest decisions, like Karnataka High Court in Bahubali Neminath. You have Punjab and Haryana Dularam's case, where the courts have held that if GP addition is made, books are rejected. Very same set of books cannot be relied for any other purpose. Now there are some important points when it comes to books of account. Now look at this. When 68 is attracted, when it is recorded in the books of account. Rather, it uses the word books, doesn't even use the word books of account. Interestingly, section 68 uses books. Whereas 69 onwards, they use books of account. Let's see the difference between books and books of account a little later. But most importantly, in 68, the trigger is sum is found credited in your books. That means trigger is recording in the books. But when it comes to 69, 69A and 69B, trigger is not recording in the books. Fundamental difference will have to be noted here. Meaning what? If something is not recorded, some is not found credited, 68 cannot be invoked in your books. Or there are situations where you don't have books of account. You don't have books. 68 cannot be invoked at all. Now, if 68 cannot be invoked, does it mean he can't tax you? He can tax you on the basis of rule of evidence, like how I explained earlier, but he can't tax you under 115 BBE because it is not income referable to section 68. So this is an important principle that needs to be borne in mind. Now, if you look at, as I said earlier, 69, 69A, 69B, they use books of account. However, if you look at 69 and 69A, in addition to books of account, they have two more words, if any. Look at this, books of account, if any. These words, extra words, are not found in 69B, which will only use books of account. So now this will give rise to an important question as to, will 69 and 69A apply even when there are no books of account because they've used the word if any? What is the meaning of or significance of use of words if any? See, if you look at the language of 69, which of course, when time permits you read, I'll just read it out very quickly to you now. It says, where in the financial year immediately preceding the assessment year, the assessor has made investments which are not recorded in the books of account, if any. Look at it, it's a continuous single flowing sentence, seamlessly flowing sentence. Assessor had made investments which are not recorded in the books of account, if any, maintained. So in my view, this continuous seamless reading, assessor has made investments which are not recorded in the books of account, if any, means even if no books of account are maintained, 69 and 69A are not attracted. Meaning, in sum and substance, if books are not maintained, neither section 68, nor 69, nor 69A, nor 69B would get attracted. Although they may make an addition outside this chapter, in which case, while addition may be sustained, rate cannot be under 115 dBE. Therefore, you have to keep this in mind. In all possible occasions, you argue that because there are no books, these sections are not attracted. Now, there is inconsistency. For example, if you look at 68, it says books of an assessee maintained for any previous year. Books of an assessee maintained for any previous year. Whereas if you look at 69 and 69A, books of account, if any, maintained by him for any source of income. I tried to, make out the important and meaningful distinction between the two, but, it hardly makes a difference to me, unless, of course, you can use your more intelligent brain to, fathom out as to what are they trying to say here. Now, interestingly, when I was reading one of the recent decisions of Gujarat High Court in Darshan Enterprises case 441 ITR 473, please look at para 4.7, where the revenue itself will concede that existence of books is an implied condition for invocation of 68. That means if there are no books, 68 cannot be invoked. Similarly, Taj Borwell's case in 291 ITR 232, and the Chennai Tribunal in GSNR Rice in 90 ITR Tribunal 114. You have, so many decisions on this where, you don't have books, the section 68 cannot be invoked. Even Mohankala also, 291 ITR 278 Supreme Court, they say that there has to be credit of amounts in the books of account. Now, then what is the meaning of, the book or books of account? If you go to section 212A, which is introduced recently, look at the definition of, 212A. Books are books of account. Books are books of account. Includes ledger, day books, cash books, account books, and other books. Look at this. They have said, and other books. And other books means registrum generis, like subledger, subjournals, etc. Whether kept in the written form or in an electronic form or in digital form or as printouts of data stored in such electronic form or in digital form or in a floppy disk, tape, or any other form of electromagnetic data storage device. So books are books of account, includes. Now one may say, because they use the word includes, it will include anything and everything. The answer is no. Here the word includes will have to be understood in an exhaustive sense because they explained all what could be books. If they were to make it really inclusive, they should have kept out the ordinary meaning of what books of account are, but they have put in only ordinary meaning of books here. See, as an accountant, you understand books as including ledger, day book, cash book, account book, and other books. So it's ordinary meaning only. So therefore, It is not an inclusive definition, it's an exhaustive definition. Includes will have to be understood as means here, and these are the books of account. Now, a question that would arise is, a search is conducted in my place. They will find a diary in my premises where I have noted from Sachin 1 crore. On one side, I have written some asset which is recorded in my books of account. Other side, I would have called it as something else in my books, but here I have written as cash loan from Sachin 1 crore. Then they would ask me to prove all this. And they want to invoke 68. Question is this diary a book of account or rather a book? Is diary a book? The answer is no, according to me, for the reason that if you look at the definition of 212A, they have called books or books of account as synonyms. Otherwise, diary is a book. There is no doubt that diary is a bound. Anything which is bound is a book. Diary is a book. Now, this definition comes to a rescue. If they had only defined books of account and not defined books here, one would have argued that the book would include diary. But look at post definition. Books or books of account would have only this meaning. That means they would want to understand books same as books of account. They can't, they're like Nositor was sauces. Each will take the meaning from the other. Therefore, after this definition of 2 within brackets 12A, a diary in my view cannot be called as a book. I have another reason why diary should not be called as a book. Look at the purpose of 68. Why is a sum found credited? Meaning what? A sum found credited means on the liability side, you generate a source. Why do you generate a source on the liability side? You generate a source on the liability side for the application on the asset side. That means it's a balance sheet filling exercise. You are tallying the balance sheet by inserting a fictitious entry on the liability side to account for the asset which you have bought, which is not comprehensible in the context of a diary. Therefore, the word books in 68 will have to be understood necessarily as books of account. And the sum found credited will have to be understood as that would explain one of the liabilities to the liability side. So this is the natural understanding for the purpose of books of account. Then, of course, there are various decisions which I will not bother you now, except that I will conclude by saying that, in my view, if it is 68, there has to be a sum found credited in my books. When I don't have books, or when no sum is so found credited in the books which I maintain, 68 cannot be attracted. Similarly, 69, 69A, 69B, all will get attracted only if I have maintained books of account. If I have not maintained books of account, these sections are not attracted. They may make an addition, let them make addition, but not under these sections. I want to go out of these sections, particularly because of 115 BBE. Yes, sir. Any questions?
So, Sir Rajendra here once again.
Mr. Rajendra, you have exhausted a quota. Yeah, please. I'm only joking. Please tell me.
So, sir, in all presumptive cases, they can tax me under the rule of evidence, right? 44 AD for rule.
Yes.
And second thing, I want to go to
but they can't tax you under 115 BBE.
Right, sir. Sir, I want to go one last proposition which you made, that credit worthiness and source of source, these are two different.
Exactly.
So, sir, if I have proved the credit worthiness, can department still or the court can still say that onus lies upon me to explain the source of source also? Because credit worthiness itself is the end of explaining the source of source.
No. Did you hear me when I explained you the decision of 264 ITR 254 Nemichand Kothari's case? I already explained that to you little ago. Okay. Where I now have clarified that, except when two provisos are invoked, in all other cases, In all other cases, the moment you establish credit worthiness, that is good enough. I gave you the example also in that. I've answered this question. Yes, sir. Any more questions, sir? Anyone else?
Sir Piyush this side. I just want a little more elaboration from your side on the if any concept which you have explained. Because had it been the like, for example, in 68 they use the word books of account maintained and they don't use the word if any, but in 69 they use the word if any. So does it mean that even if I have not maintained the books of account, 69 can still be applicable, because that is how normally department is interpreting this.
No, exactly. That is why I like write this question. See, immediately the moment you see these two words, if any, a doubt would arise. Okay, whether words if any means if at all you have maintained books of account. Otherwise, also this section is attracted is what department would want to argue. Correct?
Yes, sir.
Correct. But that is why I read out these words to you. If you have heard me, I mentioned that the language is assessee had made investments which are not recorded in the books of account. And if you look at the end of it, the value of the investments may be deemed to be the income. What investments? Investments which are not recorded in the books of account, if any. See, investments which are not recorded, it's a seamless flow of words. So whole of section 69 is dealing with investments which are not recorded in the books of account. So therefore, in my view, the words if any will have to be understood as with reference to if any maintained by him for any source of income. That's all. It would not in any manner make a situation of where you are not maintained the books of account at all, still section 69 would apply. That is not correct according to my view. Of course, department may take a different view, which they are entitled to take. We'll have to find this out. Yes?
Okay, sir. Thank you.
Sir,
No. Yeah.
Hello, sir. I'm NB Gandhi. Do you listen me?
Yes,
Hello.
yes, sir. I am here to listen to you, sir. Please proceed.
Thank you, sir. My question is on 68, sir. The question is this, sir. This is for assessment 1230 in the opening.
Sir, can you stay at one place? Can you stay at one place and ask the question?
Yeah. Now it is clear.
Yeah. Please don't move, sir. Yeah. Otherwise, you can switch off the video.
Sorry, sir.
Yeah.
My opening balance was a debit balance of 5 lakhs. I received further 20 lakhs. I repaid 10 lakhs, and the closing balance is a credit 5 lakhs. My question is clear, sir.
You have an opening balance of 5 lakh debit.
Yeah, I further paid 10 lakhs.
Just a minute. Opening balance of 5 means I owed you 5 lakh in the beginning.
I had to receive it as a debit balance.
I owe you 5 lakh in the beginning.
Yeah.
You gave me another 10 lakh, correct?
Further. So debit balance was 15.
5 will become 15. 5 will become 15. Yes, sir.
Yeah. Then I received 20 lakhs during the year.
Yeah.
And the closing balance was 5 lakhs.
Yes. Tell me.
Yeah. Then the question is that AO has made the addition of this 5 lakhs. So I said, see, where is the question of you making before the tribunal? I said, where is the question of this 5 lakhs? What about the balance 15 lakhs, which also I received, and these are the credit entries in my books. So what, in other words, you are doing is my 15 lakhs rupees, which I have used to repay the debit balance, is a genuine transaction. And only 5 lakhs is an ingenuine transaction. How it is possible?
No, not like that. See, I owe you 5 lakh in the beginning. Then I owe you another 10 lakh. So you have given me together 15 lakhs.
Yeah.
So I not only repay 15 lakhs to you, I give another 5 lakhs to you.
No. It is the other way around.
Mr. Gandhi, I think considering this, because yours is a particular fact situation.
Yeah.
And to explain to you all these facts will take time, right?
No,
so,
only small, sir, so only small question. If the total credit in the books are 20 lakhs and he is making addition of 5 lakhs, accepting by other way 15 lakhs are genuine, is it correct?
Sir, it's like this. Him accepting 15 lakh appears as genuine, appears correct because it is your money lying with me, which I have given back to you. So
Yeah.
he has accepted it. He's
Yeah.
only doubting that extra money that you're showing,
Yeah, yeah.
for which you
Closing
have to
balance.
give the nature and source. Okay.
Okay, okay,
So
okay.
now that another proviso has been brought in, first proviso has been brought in by Finance Act of 2022, because it is a loan which I have given you.
Yeah,
Then source of source also will have to be proved after 1/4/2022. Okay.
yeah,
Yes.
yeah. Excellent. Right. Thank you,
Right.
sir. Thank you
No
very
problem.
much.
Thank you. Now we'll go to, I think, Sachin, we are already out of time. So how much more time can I take?
Sir, we can extend it by 15 minutes, sir, if it is okay with you.
Yeah. We will. I'll try to now cover one important section, 115 BBE.
Sure.
This is extremely important because, yeah. And, I'll go for another 10 minutes. We'll, if it's fine.
And
Now,
also proviso, sir, please.
which proviso to 68? Huh?
Yeah.
Oh, okay. Let's try, sir.
Yeah.
We'll try.
Right. Yeah.
Okay. Now, look at this 115 BBE. Look at this slide carefully. I have already told the implication of this, dangerous section. It says, subsection 1 says, where the total income of an assessee includes any income referred to in these sections and reflected in the return of income furnished under 139. This is one portion. Second portion, determined by the AO, that means total income of an assessee determined by the AO includes any income referred to if such income is not covered under clause A. Then you will have to pay a tax of 60%. And subsection 2, it says no deduction in respect of any expenditure or allowance or set-off of any loss shall be allowed. That means absolutely no deduction. What's on gross basis, you end up paying close to 80% tax, 10% penalty if under 271 AAC, or 30 or 60% penalty under 271 AAB subsection 1 capital A. Now, we have a few questions which we'll have to discuss. Firstly, is 115 BBA automatic the moment these sections are invoked? If these sections are invoked, it is automatic. The only way out, as I've been trying to tell you, is to bring out a situation of these sections not being attracted. While addition may still be sustained on the rule of evidence by applying Govindarajulu Mudaliar and like Orissa Corporation, but it won't come under these sections. I gave you some illustrations of 69A for land, and I gave you illustration of where books of account are not maintained. All these illustrations I gave you. Those cases are anyway not covered under 68, and therefore in those sections, those cases 115 BBA would not apply. However, if section 68 etc. is successfully invoked, if the courts were to hold yes 68 is properly invoked in your case, then 115 BBA is automatic. Now, most important thing is go to this voluntary offer. This is extremely important. Now look at this. I go back to 115 BB E subsection 1 clause 1, rather A. It says includes any amount referred to in section 68 etc. and reflected in the return of income furnished under section 139. Please look at this carefully. Look at this very, very carefully. What it says, let us say I have shown some fictitious borrowal. I bought some asset. I've shown it in my books on the asset side. And I have shown excessive expenditure to bring down my profit. I fall short of cash. Cash is negative. What I'll do? I will show that I have borrowed 2 crores from Jagdish Punjabi. So I just written his name. 2 crores from Jagdish Punjabi. 2 crores. Then I'll start reaching out to him before I file my return. Hey, give me some confirmation. Mr. Jagdish Punjabi says, you may be my good friend, but that's it. Sorry, I can't, like if I give you, I'll have to explain the source. So he would not rightfully give me any. Then I would wonder, hey, why penalty under 271 AAC 10% penalty? Or tomorrow, if a such takes place, why 30%, 60% penalty? I will at least offer it myself in the return. So I go to my return of income. In the return of income, there is a column where I can, under income from other sources, you have 68, 69, etc. I write 68, unexplained cash credit 2 crore. Now, literally reading this particular provision is attractive, isn't it? 115 BBE, subsection 1, my total income includes 2 crore and reflected in the return of income furnished under 139. Clear? However, the larger part is this 115 BBE refers to income referred to in section 68. Now you go to section 68. What is 68 about? Where a sum is found credited in my books, in respect of which I don't offer an explanation or offer an explanation which is not found satisfactory by the assessing office. What does it mean? First thing is found credited. Found credited means what? When somebody else finds me, not when I myself show it. So that is one difference you have. It is not found by somebody else. I have myself reflected. So it is not to be regarded as found credited. So 68 is not attracted. Difference 1. Difference 2. It is found credited and I fail to offer an explanation or offer an explanation which is not found satisfactory by the assessing officer. That means there is a process involved here. Something is found credited, then the AO will ask for an explanation. I fail to give. Or I give an explanation with the AO would not be satisfied. All this can happen only after my return is picked for scrutiny. Till such time my return is picked for scrutiny, my return is found to be accepted. If my return is found to be accepted, the income which I have shown, though under the column of 68 in my return of income, is not the one where it is found credited, an explanation is sought, and an explanation is given, and explanation so given is not found satisfactory by the assessing officer. So 68 parameters are not met. Therefore, it is not an income referred to in section 68. Similarly, 69, 69A, 69B, 69C, 69D, in all these cases, it would require that I have to give an explanation to the assessing officer. I cannot give explanation to just like that unless that is asked. And who can ask? Only the assessing officer can ask. In what point in time? At the time when my assessment is picked for scrutiny. Your Hotel Blue Moon's case, if no notice comes to me on scrutiny, my return is found to be accepted. My returned income is to be assessed income. So if my returned income is to be regarded as assessed income, where is the question of me having to offer an explanation, which explanation is found to be not satisfactory by the assessing officer? Therefore, in my view, these are very, very critical parameters of these sections. Merely because you show it in the return of income, it would not make it an income of section 68. Even if you classified it under the column under section 68 in the return of income, you have the decision of Supreme Court in 196 Taxman 181 in Tulsian NEC Limited's case, where they said the form doesn't override the act. A form doesn't override the act. Act is critical. 115 BBE 1A clearly says referred to in 68. What is referred to in 68? Go to 68. Some found credited, you fail to offer an explanation, and the explanation offered by you is not found satisfactory. When you yourself offer it in a return of income, question of you offering explanation or your explanation not found satisfactory does not arise. Hence 68 is not attracted. Income have been rightly offered to tax, but not under 68. And if so, 115 BB 1 year is not attracted. Now, take a situation of you get a notice under 142. Somebody would say, no, it's not okay, not acceptable. I'm sure revenue is going to resist this. This is just for your consumption and for you to fight it out. Now, next point is 115 BBE 1A would refer to return under 139. Now you file a return under 142.11, or you might file a return now under 148. Unlike in 148, where the ending words of 148 would say it will be treated as if it were a return under 139, those words are missing in 142.11. So therefore, in a given situation where you would file a return in pursuance to notice under 142.11, and you make an offer of this income to tax in your return, then you might argue that it is not a return under 139, and therefore this is not attracted. Now, let's take a situation. I told you that, look, like it will require under section 68 that an explanation has to be sought. You either fail to give an explanation, or the explanation which you would give is found to be not satisfactory. This process, unless and until it is completed, 68 is not attracted, is what I've said. Now, let us say, take a case where a search will take place. When a search will take place, the search party will come. They will ask explanation. You fail to give explanation. Then they'll make an appraisal report. Then it will go to the department. Then you get a notice under 148. And you reflect it in your 148. Can the department argue that during the search, before the search team, this process of seeking explanation, you are offering explanation which is found to be not satisfactory has taken place? The answer is no, because search party who does the appraisal is not your assessing officer. The language used in section 68 is assessing officer, number one. Number two, they would give a notice under 148. You would not want to get headache. You will reflect it in a written of income under 148. It would still be a case of parameters of 68 not being met, because merely filing it in your, showing it in a written of income in pursuance to return notice under 148 would not mean that an explanation is sought or your explanation given is found not satisfactory by the assessing officer. He will kick in only after he issues the notice. Blue Moon's case, circular 549, all are very clear. Till your return is picked for scrutiny, your return is accepted as, your returned income is accepted. Now look at the new procedure of 148A. Let us say he will issue you notice under 148A within bracket small b. He will give you information suggesting escapement of income. There he will say that, these are the unexplained cash credits. You file objections. Then he will pass a speaking order under 148A B. Under 148A within brackets, he can even conduct an inquiry. In the course of inquiry, he will ask you all this information. You will seek explanation. You will fail to give explanation, or explanation you give is found not satisfactory. Can it be said that 68 is attracted at that stage? So after that, in your return under 148, if you voluntarily disclose, it is still a case of 68. Even then, my answer is no, because under 148A, the limited role of the assessing officer is to the extent of passing a speaking order to see as to whether it's a fit case for issue of notice under 148. His role is extremely limited. He has to only decide whether it's a fit case for issue of notice under 148 or not. That's all. In the guise of 148A, within brackets small a inquiry, or within brackets D proceeding, he cannot usurp the role of the assessing officer under section 68, which he can do only after it kickstarts the assessment by issue of notice under 143.2. This is my view. I would request you to kindly apply your mind in this regard. Of course, I have some more variations here. For want of time, I would not discuss, but this is for you to look at it. There's one more important point which you need to know here is 115 BBE versus 115 BBC. Anonymous donation in terms of 13.7 or in terms of 16th proviso to section 1023C, anonymous donations are to be charged to tax and they're not exempt. At what rate do you pay tax? At 30%. What is anonymous donation? Where the assessee trust does not maintain record of identity. That means name and address and such other particulars of the donors. So which is nothing but cash credit. where you are unable to explain the nature and source. So if it is 115 BBC, you will have 30% tax. If it is 115 BBE, you will have 80% tax. Because 115 BBC is more specific, you can definitely say that generalia, specialibus, non-derogant, and hence your case is covered under 115 BBC. One another point which you'll have to appreciate here is that if you look at the first proviso to 56.210, any sum received by a charitable trust, look at first proviso, look at clause Roman Big 7. Any sum received by a charitable trust registered under 12AB or under 1023C is not covered by 56.210. So it's a sum received without consideration. Donation also is a voluntary contribution without consideration. Of course, it's a bigger call, which you can examine in a different situation, where I would say even 115 BBC is also not attracted if a charitable trust were to receive donations on which it doesn't have any record, because it is per se exempt under 56.210 proviso, first proviso, clause Roman Big 7. Yes, sir. With this, I think I'll close. I doubt if I have time to discuss anything else. I'm sorry, Mr. Sharma, about the provisos. It would take some more time to discuss them. Any questions?
Only one thing you can explain about the proviso, that now merely because filing affidavit or giving confirmation will not suffice. You have to actually give the bank statement of the creditor, etc. Then only you can say you have proved the source of source. Right,
Yes,
sir?
Correct,
Yeah.
sir.
Yeah,
So
right.
now they have, as you are aware, by Finance Act of 2022, they have brought in one amendment whereby they have inserted first proviso, which is on loan or borrowal or such other sum by whatever name called. So loan, borrowal, or such other sum. They have not said other sum by whatever name called. They have said such other sum. Such means it has to be in the nature of loan or borrowal. So gift is not covered. So this is one interpretation which you'll have to do. Debentures are not loan and borrowal. Mr. Sharma?
Yes, sir.
Debentures
Yes.
are not loan and borrowal. I am not saying, Justice Nariman said so in MM Aqua in the context of 43B.
Yeah.
You know, when an unpaid interest is converted into debenture, he refused to invoke explanation 3C to section 43B. And he said debenture is not loan or borrowal. And after that, they have amended section 43B explanation 3C to include debenture. That means even Parliament now understands debentures are not loan and borrowal. Therefore, debentures are not covered by first proviso.
Yes.
But source of source has to be established if you are covered by first proviso. Yes, sir.
And of course, the creditors will not be covered, of course. Loan or borrowing. Business creditors definitely will not be covered, right? Because it is loan or borrowing.
Trade credits are not
creditors.
covered.
Yeah,
Trade
that's
credits are not loans or borrowing.
Yes.
Not the business credit, trade credit.
Yeah,
Yes,
trade credit. Yes, sir.
Yes, sir.
He's trying to say section 68, we need to provide source of source. But as far as section 69A and B is concerned, satisfactory explanation is required. Source of source is mandatory or not. And he's trying to say, in case of a bank deposit without books of account, if the sum is borrowed from a friend and who has been examined by the AO under oath under section 131, and the friend confirms that he has having lent. So whether 69A or B can still be triggered?
Okay. See, it's essentially a case of a bank deposit, correct?
Yeah.
That means it is a case of 69A.
Correct.
Money, bullion, it's not money, bullion, no, jewelry, no, valuable article. Very difficult to call it a valuable article. Assume it to be so. See, bank deposit is not an article. At the most, it cannot even be called as money as such. Money is to be understood as legal tender. So, it could at the most be called as investment under 69. It could be called as an investment. So, under 69, if 69 is attracted, source is asked. So, you would say, I borrowed 1 crore from Sachin, and Sachin confirms. That's good enough. If the identity, genuineness, and creditworthiness of section is established, source of source is not required. Source of source is not required.
Okay.
Name Chand will satisfy.
Okay.
Yes, sir.
Thank you, sir.
Sir, this bank passbook is not books of assesses.
Sir, I told you reason. I told you 2 reasons. One,
Yes, sir.
One, see, some found credited in the books maintained. Bank passbook is not maintained by you, number 1.
Right.
2, it is not books of account as understood in 212A. 3, some found credited is a balance sheet tallying exercise. It's a balance sheet tallying exercise. Okay. So, which cannot occur conceivably in the case of a passbook. Therefore, passbook cannot be called as books.
Right, sir.
Even if there are some decisions to the contrary, according to me, with due respect, those decisions are incorrect.
Right, sir. But Bombay High Court, Bhaichand Gandhi is there, 142.
Yeah. No, there are tribunal decisions which have said, after 212 amendment, they have said all these diary as books are all wrong. According to me, with due respect, of course. Yeah.
Yes.